Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Welcome to the Mineral Rights Podcast. Thank you so much for joining us. My name is Matt Sands, and I'm here to help you make the most of your mineral rights and royalties. Justin Williams joins me again to provide the individual mineral owner perspective. And today we are going to talk about net royalty acres. But before we get to today's show, I have a quick reminder. As always, you can find show notes at mineralrightspodcast.com. And also, please subscribe to the show on iTunes or wherever you get your podcasts and leave us an honest rating and review. It only takes a minute. And to ask a question to be featured on an upcoming episode, please leave us a comment at mineralrightspodcast.com, or you can shoot us an email to feedback@mineralrightspodcast.com. And now on with today's show. Hello and welcome to another episode of the Mineral Rights Podcast. I'm your host, Matt Sands, and with me today, as always, is Justin Williams. Hey, Justin.
Hi, Matt. Thanks for having me.
Thanks for being on the show. And today we are going to cover what a net royalty acre is. So, first of all, you probably have heard of the term mineral acre and maybe have run across the term net royalty acre and just kind of wonder, how do you figure out how many net royalty acres you own? Before we get to the details, go ahead and throw out a definition. So a net royalty acre is basically a unit of measure that we use to determine just how much right to the minerals you own in a tract of land. And the difference between that and, you'll see the legal description talks about the gross acreage. So it may say 640 acres more or less on a deed or on a lease, and that's really referring to the surface footprint basically of that tract of land. So have you run into this, Justin, and trying to figure out how many net royalty acres you own?
I have, and it's not something you hear a terrible amount, but every now and then somebody will come and they'll be talking NRA rather than NMA, and an NRA is usually more. And I know for me it was a bit confusing just because it seems like you own more than you do. And it was something I definitely had to educate myself.
Yeah, I agree. Yeah, when I first came across it, it was a bit, it seemed like an older term. And so I think that's maybe a lot of times what people that have been in the industry for a while are more familiar with net royalty acres. And it's maybe not used as commonly, but it is important to know what it is. So, Justin, I'm going to throw a question out to you. So can you tell me what a net mineral acre is before we get into net royalty acres?
Sure. So a net mineral acre is defined as a full 100% ownership in 1 acre of the land.
That's exactly right. Yeah. So that's owning 100% of the minerals in that 1 acre. And the way to calculate it is, let's say a quarter section, which is 160 acres, is you want to multiply your gross acreage by the fractional interest in the minerals you own in that tract. So let's say, again, if you own minerals in the northeast quarter of a section, that's 640 acres. So if your decimal ownership in that 160 acre tract is 1/10, just for the sake of making this easy, you would own 160 divided by 10, which is 16 net mineral acres. So you have 1/10 of the minerals in a 160 acre tract is 16 net mineral acres. And typically the term net royalty acre means the mineral royalty interest in 1/8 of 8/8 in and under 1 acre of land. So we talked about before, net mineral acre is a full 100% mineral interest in 1 acre of the land. And when we talk about the royalty acre, it's back to the 1/8, which is was the standard back in the day, which is 12.5% royalty. And it would be a full 12.5% royalty in and under 1 acre of land. So it is basically saying it's the number of net mineral acres that you own, assuming a release at a 1/8 royalty, or again, that 12.5% royalty.
And why is this so important, Matt? I know this is something that it really goes back to what it's leased and creating something that's a comparable value for the land surrounding it and when you're making offers.
Yeah, that's exactly right. So the real benefit for knowing how many net royalty acres you own is it allows you to do an apples to apples comparison between different tracts of land in an area. So, for example, if you have a neighbor that maybe got an offer to buy their interest for $5,000 per net mineral acre or per NMA, if you don't know their royalty rate, it would be hard to compare that offer to another offer that you might have received for your minerals. And so this is where the NRA comes in because your neighbor may have a different royalty rate than you, and that plays in significantly to the value of the minerals. So here's a just kind of a quick rundown on how to convert your number of net mineral acres to number of net royalty acres. And it's really easy. First of all, like I mentioned, you have to know your number of net mineral acres and your royalty rate. So you can do that once you have that information. Simply either divide your royalty decimal by 1/8 and then multiply that number by your number of net mineral acres to get your net royalty acres. And probably an easier way to explain this in a mathematically equivalent way is number of net royalty acres equals the number of net mineral acres times your royalty rate times 8. Okay, so net mineral acres times royalty rate times 8. And we'll just give you a couple of examples so that you can make sure that you know how to do this. So, in the example that I mentioned earlier, where your neighbor got the purchase offer of $5,000 per net mineral acre, if you know their royalty rate, you can figure out the dollars per net royalty acre to compare your offer in terms of dollars per net royalty acre. And so you don't even have to know the number of net mineral acres that they own, which is actually really useful if you know the dollars per net mineral acre. You can just assume one net mineral acre and then use that to figure out how many net royalty acres. And so this is kind of a, I don't know, I call it a hack basically, is if you're talking to your neighbor, they say, yeah, I got an offer for $5,000 per net mineral acre. That's all that you would really need to know. And then again, with the royalty rate, which is actually one of the pieces of information that is fairly easy to find in the county clerk and recorder. You know, if you happen to talk to them to say, hey, what are you leased at? Or if you maybe already know that from earlier conversations, you can quickly figure this out. So again, if your neighbor in this example, let's say they're leased at 1/8 royalty. And so to figure out the number of net royalty acres, you just multiply that 1/8 royalty times 8. And again, we have 1 for the number of net mineral acres. And so you get 1, and then you multiply that by the dollars per net mineral acre, which is in this case 5,000. So 5,000 times 1 is 5,000. So their offer would be equivalent to $5,000 per net royalty acre. Now, if let's say that you're leased at a 25% royalty, and again, like we talked about before, you have 16 net mineral acres, your number of net royalty acres would be 16 times 1/4, which is that 25% royalty or 1/4 royalty, times 8. So that boils down to 4 times 8, which is 32. So you have 32 net royalty acres. And if you've received a purchase offer and want to compare it to your neighbor's offer, you can do this from knowing your number of net royalty acres. So if you had an offer of $6,000 per net mineral acre and you have those 16 net mineral acres, so $96,000 cash purchase offer for your minerals, face value. Justin, wouldn't you think that that would be a better offer? I mean, 6,000 per net mineral acre is pretty good, right?
Right. Sounds good.
Yeah, sounds good. It's better than 5,000. So you might look at that and say, well, I got a better offer. I'm going to go ahead and accept it. Well, if you were to think about the number of net royalty acres you have and figure out what that is on a net royalty acre basis, you take that $96,000 and then divide it by that 32 net royalty acres that you own. So all of a sudden, you can tell that you have an offer actually of $3,000 per net royalty acre. So this is a interesting thing that a lot of mineral owners don't know. So you get an offer of $6,000, like I mentioned before. You might actually think it's higher than your neighbor's offer. You say, yeah, that seems like a good offer. I'm going to go ahead and accept it. But when you normalize it down to a net royalty acre basis to compare apples to apples, and again, why this is important is because your minerals are leased at 25% royalty, your neighbors are leased at a 12.5% royalty. And assuming all other things being equal, let's say the same number of net mineral acres, same drilling spacing unit, same lease terms, besides the royalty rate, you would actually get paid twice the amount in royalties on any production. So you take 25 divided by 12 and a half, that's 2. And so you have twice the royalty rate of your neighbor. So you get more money. And so it would stand to reason that they're going to be worth more, right?
I mean, I think this is something that mineral right owners run into as well when numbers are being used in whoever's best interest. At times, companies will come in using these numbers, knowing that mineral right owners may not be as familiar. So I think it's something that is definitely worth taking the time to educate yourself.
Yeah, and it's, may not be something that they're going to make the offer on a net royalty acre basis, but it is something as you're doing your homework and evaluating the offer, you can use to check if it's a good offer or not. And so, and the other thing that, that I will see, and I've seen a lot, is where an offer that will say something like $10,000 per acre for minerals, assuming a 25% royalty rate. So basically, that gives you enough information to be able to figure out what that offer would actually be on a net royalty acre basis. Assuming a 25% royalty rate, if you try to figure out what it would be on a 12.5% royalty rate, it would be likely closer to about $5,000 an acre. So if you get an offer like that, you think, okay, they're offering me $10,000 per net mineral acre. If there's something on there where they say, well, assuming a 25% royalty rate, and then you start to talk to them and you tell them your royalty rate is really 12.5%, the real offer that they're going to put on a purchase agreement is going to be closer to that 5,000 an acre. So that's kind of another way of sort of not really saying how much per net royalty acre, but you can sort of figure out on your own what it would be given your specific royalty rate. So you would just divide it by the royalty rate they stated and then multiply it by your royalty rate to figure out. So yeah, it could be potentially a lot less than what they're saying. And so to help you make sure that you're reviewing any offers you receive on an apples to apples basis, again, you need to know the offer in terms of dollars per net royalty acre. And then that way you can figure out if it's, how does it compare?
Absolutely. And with everything in oil and gas, there's always some strange scenarios. And I know, Matt, you had a couple that you wanted to talk about when it comes to NRA.
Yeah, the previous examples I mentioned assume no non participating royalty interest is carved out of your minerals. And if you're not familiar with that term, go back to the Mineral Rights podcast and you can find some more information on our website on what a non participating royalty interest is. But basically, it's an interest in the mineral estate that is carved out of the minerals and so carved out of your portion of the estate. And if you were aware of a non participating royalty interest that exists, you would have to determine the number of net royalty acres by taking your royalty rate and then subtracting the NPRI from it and then dividing that by 12.5%. So you might think that at the end of the day, you prefer to see this sale in terms of dollars per net royalty acre. It's just personal preference. When we make purchase offers, we prefer to state that in terms of dollars per net mineral acres, along with any terms with how the offer would be reduced should any royalty burdens like an MPRI exist. And really, what we do is, and what you'd want to see in any time before you sell or before you sign a purchase or a sale agreement, is your specific case. So you want the mineral buyer to have evaluated your property based on the specific royalty rate that exists, assuming you're leased. And so that way, for sure, based on exactly what you have, what they're actually going to pay you. And so that's where you want to just ask questions. If they're any, at all unsure about that, ask the buyer, what is it based on? What royalty rate are you basing this on? And just to make sure that it does match what your royalty rate is. In the case of unleased minerals, ask the potential buyer what royalty rate they are basing the offer on. So if they used a 12.5% royalty rate in their assumptions, but maybe the going rate is 15% or 20%, ask them what their offer would be based on that other royalty rate to get it in terms of both the dollars per net mineral acre and then the lump sum amount. So that's the other thing is really, if you don't have it on a net royalty acre basis, is just get it very clearly stated what the offer is in terms of dollars per net mineral acre and what that lump sum amount would be based on the number of net mineral acres that they are assumed in the transaction. And you can use that information in negotiation. So if you know that the going rate is higher than the royalty rate that they used in their evaluation, there's some additional potential room for you to get a higher offer based on assuming a higher royalty rate. So anyway, that's sort of the practical application of this. And again, what we typically do and what I would recommend you looking for a buyer that is transparent, at least, if not this same methodology, but that at least is transparent in telling you what they're basing the offer on, is, we look at doing the due diligence again to determine the exact royalty rate for the specific piece of property and state the offer in both dollars per net mineral acre. And then, clearly state in there that if our title search does identify that they own more or less, we would adjust the offer accordingly. But the metrics that the offer would be based on is on that dollar per net mineral acre basis, so that you have that in writing that if you do actually own more, that they're going to pay you for that additional acreage and not just some fixed amount, no matter what. So again, net royalty acres, kind of a confusing term, but really at the end of the day, pretty easy to figure out. And it's really useful in reviewing comparable sales and, useful for identifying what the going rate is in an area to check your valuation. And so as a buyer, we also do the same thing just to make sure we're looking at our offer in terms of what other offers are being made and that they're aligned on a net royalty acre basis, because each property might have a slightly different royalty rate or different lease terms. So if you're looking for help to evaluate an offer, this is something I do for my consulting clients. And, if you do have somebody that performs evaluation for you, ask them if they have looked at the dollars per net royalty acre, if there are any comparable sales that they're aware of, to make sure that they've validated their analysis based on some actual data out there. So kind of a short episode this time, but just wanted to throw this out there. So anybody that is confused by the term net royalty acre, I know I was when I first got into the business. Hopefully this clears up some of that. And Justin, anything else you'd like to add?
No, I think that's a pretty good sum up. And I'm sure, Matt, you'll have a link to the show notes so everyone can kind of follow along the mathematical equations and all that fun stuff. Because if you're anything like me, it took me several times going over it before I truly grasped it.
Yeah, definitely. It's a lot of times this is much easier just to read. So check out show notes like Justin mentioned and find links there. If you some of the other terms that we've thrown out there, in terms of NPRI or other acronyms out there, we have that all defined on our website. So check that out. And if you have any questions, again, you can always reach us at feedback@mineralrightspodcast.com. And please, we ask only one thing. If you find value in this show, is to go on to iTunes or wherever you get your podcasts and leave an honest rating and review. That is going to help us make sure we're reaching all of the other mineral owners that need this information. So until then, thanks again.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.